All right, good evening, everyone. Tim Davis coming to you guys with a market review. I know it's been a minute, but my schedule has been a little crazy, so get in here when I can just to do an update. And no time is better than now because um, as we saw last week, the market shifted. The market shifted over the past week and a half or so, and I want to point out some things that I've been pointing out for a while now. As far as the tight ranges that the range we've been in. Long-term range we've been in for probably for better of a part of more than 6 months or so. I'm going to start off by taking a look at the SPXA 200R, which is the tool that tracks the S&P 500 companies that are trading above their 200-day moving average. And for those who've been following me for a while, you know I really like to use this tool just to see when momentum possibly decides to shift. So with this tool, by starting out here, you can see a definite trend change in recent days and weeks. So let me see. So we see this particular tool, like I said, the highest you can get is 100%, the lowest you can get is 0%. We traveled, made it back up to a level of 76%. We have not seen 100% since at the beginning of the pandemic fall. So we traveled up to 76% of stocks trading above that 200-day moving average back in January of this year, and we made it back up to that level not too long ago. And as you can see, we started to trend backwards. And the same thing happened when we made it to the level back in January. We started to pull back. Now, how far this tool goes, we'll have to wait and see. One of the, I guess, a positive note is that we're already in oversold territory on this tool, or in the oversold territory area, by looking at the RSI and the full stochastics. Could we continue to go lower? Yes, we could. We have to wait and see how things pan out. We're right at a level where we could see a bounce because the action is hanging right around that 50-day moving average, 50-day moving average, 50-day simple moving average. That's what we're hanging at right now. So the average is hanging right around a 50-day moving average. So could we see a bounce here? That is a possibility. We have to wait and see how start this week, or could we just hover there for the next move down? That is a possibility too. Now this is a daily chart we're looking at. So again, these ranges have been pretty well defined, and I put trend lines down here to possible levels of resistance, as well as the moving averages. This purple line is my 50-day moving average, and this red line is my 200-day. So all those can be areas of support for this overall market sentiment tool. Again, this is tool that tracks the percentage of companies trading above their 200-day moving average, and I use this as a gauge to gauge where we could be heading in the markets as well. So we have areas that we could see bounces right around this level of support, as we got a bounce here back around December, and we got a bounce here right around May. And right now we're hovering right around our 50-day moving average. Could we see a bounce here? That's a possibility. But then again, we got resistance up here, and we have support down here. So you have to see if we break through this level coming over the next couple of days. We're already, again, if you look at the full stochastics, we're in percentage. RSI, we're already down around this oversold territory. Could we trade down here and stay down here for a bit? Yeah, we could. That's a possibility. We did it before here. We did it before here. So we have to wait and see how the trading week begins. But the overall market sentiment, it's like we're trending lower back towards the mid to bottom part of this range. And as you can see, this is a wide range we've been in for quite some time. So this whole area, I know you guys see me marking up everything. This whole area has been a range that we've been in. So the lowest percentage that this percentage has gotten to was right around a little bit less than 40, right around 35. And highest we got to is 76. We have not been able to punch above the 76 percentile. So we could be heading lower. So keep that in mind. All right, now let's take a look at a matter of fact, before we leave from this tool, let's take a look at a weekly chart so you can see what the weekly chart looks like. Now, the weekly chart, you see the same thing. It looks like we are, the weekly chart shows same type of scenario, but weekly chart could also be an indication that we could definitely be just bouncing around here before we head lower, because you look at the TTM squeeze, you got the light blue bars turning to dark blue bars, you got the REMS percentage already out of overbought territory heading lower. Full stochastics already out of overbought territory heading lower. RSI just heading, it's in the midway, like it's stalling there. So we have to see how this pans out, because the weekly chart could be the one that tells us if we really got the power to push below this 200-day moving average. If we do, sometime next week, then we can probably definitely see prices. I mean, the percentages start to head lower, and that could bleed over into the markets, because it's a percentage tool. If there are a number of stocks that are starting to drop, more stocks that are starting to drop below the 200-day moving average, then you can expect the overall market to reflect that. So this tool right now is currently sitting around 61%, around 61%. So there's approximately 61% of the stocks trading above the 200-day moving average, which means that, let's just say round off to 60, which means there's about 40% that are not. So, and this is continuing to fall weekly. All right. All right, let's switch straight to an S&P 500 chart. Okay, here's the S&P 500. The weekly chart shows same scenario. So you see it here. Weekly chart shows we hit a ceiling and we're starting to reverse. We hit that ceiling back here in March, around March of this year. We also hit that level around the beginning of the year, around January. And every time we've hit that level, we struggle, and we found a way to pull back. So same thing, we hit that level and then we're starting to pull back. How far do we pull back? That is the question that we have to wait and see. There's support here around 42.50. So that still would be a lot more room to the downside for the S&P 500. And then you have the 50-day and a 200-day moving average that will also act as levels of support. So right now, again, we're in a downtrend until we find a way to reverse and head back higher. Now, I think this is going to be a strong level of resistance up here. So it may be hard for price action to even break through that level. If we come back up, hit that level and test and fail, then there could be a huge reversal. And that could be the shoe that drops us much lower. But again, that's a strong level of resistance right around this level. And then we got a strong level of support right around this 42.50. So that's the range. Now let's switch to a daily chart. All right, here's a daily chart of the S&P 500, and look at that, right at that 200. I mean, I'm right at that 50-day moving average. So look at the near-term action. We could see a bounce here, but there's no guarantee. We have to wait and see how markets open up. But we're right at a level where we could get a bounce off of that 50-day moving average. But if we don't, and we struggle, and we hover around this level, then that could be more ammunition for the bears to push much lower in the near term. So got to see what happens. This is going to be a crucial Monday and Tuesday probably going to be a crucial day for markets as it attempts to get off of that 50-day moving average. We had to see what happens. If you look at the overall momentum, how long we've been in a positive momentum movement in overall markets, that's been a while, folks, if you look at what I just highlighted. So since around May of this year, we've been showing some nice strong momentum. Now the momentum is starting to shift. You see the red bars starting to pop up. We haven't seen that for about over 4 months. So could we be about to break below this 50-day moving average? That's a huge possibility. So keep that in mind. The weekly chart, daily and the weekly charts are starting to lose steam. All right, that's our S&P 500. Let's continue and shift straight to the Dow Jones. Okay, here's our daily chart of the Dow Jones. And as you can see, the Dow Jones is still above its 50-day moving average, and it's still got some space to go before we even touch the 50-day. But it too it's just stuck. So you have the Dow Jones that is showing more upward momentum than the other indices, but we are pretty much in a standstill. We're just in a range, very, very tight range. With price action, with the full stochastics oscillators and Williams percentage oscillators showing close to oversold territory. But the momentum in the TTM squeeze looks like it's just getting weaker and weaker. So the question is, do we bounce around the lower range of these particular indicators, or do we get a bounce and go higher? Have to wait and see, but it looks like we could be stuck towards the lower ranges of these oscillators, of these index, these tools, these trading tools for quite a bit. So we have to wait and see how that pans out. So these indicators are something I'll be paying close attention to. Do we get a reversal and a move higher? RSI just stuck in the middle of nowhere. So that's our daily chart of the Dow Jones. Take a look at the weekly chart of the Dow real quick. And it's still hovering around oversold, overbought territory. So that's what makes me believe that it's going to stall and then they're going to start to drift forward. That's what makes me really believe, because we still, to the weekly charts, Dow has really not really lost a lot of ground. So the Dow is hovering right up here around these in this tight range on the weekly chart, with the momentum and TTM squeeze starting to lose its flavor. And we're still in overbought territory on the full stochastics. And Williams percent still overbought territory. So we could trade around a little bit here, and then we could start to pull back. So I think the stronger case scenario is that we already broken out above this level of resistance. Stronger case scenario is that we come back to test these levels. So that is what my ultimate thesis is, that we could come back to test these levels and then see what happens after we get to those levels. So that is our Dow Jones. Let's go straight to our NASDAQ. And NASDAQ has been has been a recent weakling. It's really starting to show its favor towards the bears. Here's a weekly chart. See how we got these strong 2 rejection weeks so far. With all momentum still pointing to more downside to come, possibly. So we got this range, this channel. It's like we're starting to form a downward channel. Look at the Williams percentage, already out of overbought territory. Full stochastics starting to dip out of overbought territory. RSI already out of overbought territory. And this is on the weekly chart. So the weekly chart of the NASDAQ looks bearish. Let's go straight to a daily chart. And our weekly chart, daily chart of the NASDAQ. It's already breaking below its 50-day moving average, and that is not positive for this NASDAQ. It's not positive at all. Breaking below, so like slowly but surely, we are breaking below this 50-day. So got to see what happens. Do we get a bounce and break back above a 50-day? If not, we can start to see the 50-day start to turn downward. All right, so the NASDAQ is not looking favorable. We're already in oversold territory on RSI on the daily, oversold territory on the full stochastics. Could we stay down here for a bit? That's a possibility. Could we stay below this 50-day moving average? That's a strong possibility. As I showed you in the weekly chart looks much more bearish than it has been in a while. That is our NASDAQ. One more we'll look at before we head out of here. It's a Russell 2000. Again, it is a possibility for us to start off, bouncing, because most of these indices are hanging right around that 50-day moving average, folks. So we could see temporary bounces. I don't think it's going to be nothing to shout about, but we're in a downward trend right now until this breaks. Any bounces could be muted. So, because we've been in this, nice upward trend and momentum for quite a while, and it's like momentum is just starting to shift. Now, if these if the 50-day moving average start acting as a strong level of support, we get a strong bounce, then that could send prices back up to resistance, and then that's where we're going to run into some trouble. That's a strong. These resistance levels have been strong levels of resistance, as well as the support levels have been strong levels of support. So one is going to get either the levels of resistance is going to break, and we're going to move much higher, or the levels of support is going to break, and we're going to start to see a big shift towards the downside. All right, let's take a look at our VIX. All right, look at the VIX. And the VIX had a big move higher, as you can see here. Look what's happening. It's a horseshoe pattern, like it's ready to come back down. So that could be positive for our markets. And every time the VIX has got that little pop like that, we've seen, this is a daily chart, we've seen how it just finds a way to reverse. So reverse. It had a pop back here in beginning of July, and we reversed, came right back down to support, right around the support level, and hovered down there for a while. So could we do the same thing here? That's a possibility. Could come right back down here and to see how this pans out. So I'm be paying very close attention to the VIX, very close attention to the SPX 200R, and just to see what the overall market sentiment is. Right now, the VIX like it really wants to trend lower by looking at the oscillators in the full stochastics and RSI on the daily chart. It's like the VIX is trying to get to oversold territory. So we have to wait and see how this pans out. Does the VIX find a way to find support right at this 50-day moving average? That's what we're going to be paying attention to. Or does the VIX break below that 50-day moving average and continue to head low, which would be good for the overall market? So we got a lot to pay attention to as we head into the trading week this week. Here's our weekly chart of the VIX. Again, it has that nice strong pop over last week, with price action now hovering right around a level of support. And we are still in close to oversold territory on full stochastics. Wins percentage hit that overbought territory and came right back down. So again, this could be a strong start to the week, and we could have a strong start to the week for the lower marks. We can see the VIX continue to come back lower. It looks like the VIX wants to find a way to grind higher. So any big move up in the market, or any ricochet or bounce in the market we see on this week, it has to have some follow through on each day, or else we're going to see those reversals again. So just don't fall in love with any bounces. It has to have a follow through day in order for those bounces to be able to hold and be confirmed as a new trend higher. All right, so that is a look at the VIX. That's a look at overall markets. Again, I already took a daily. Took a daily look at the daily chart of the VIX. Then let's take a look at crude oil real quick before we head out of here. All right, crude oil. It's up here hovering around a level of support, right around this $82 level. Could crude oil start to trend lower? That is a possibility. This is a daily chart. But crude oil, it looks like it wants to hold its ground. So let's take a look at the weekly chart, see what that's showing us. Weekly chart showing us right up here around this level of support. Resistance, right around this $83 level. That's a level of resistance. And we are showing an overbought territory on the RSI. So would not surprise me to see crude start to pull back just a little here, because it's been showing a lot of green over the past several weeks. So would not surprise me to see crude oil see some kind of a pullback here in the near term. But the bigger picture, I think crude could find a way to really hold a breakout. Here's a monthly chart of crude, and it's just pushing the envelope on this level of support up here. So I think that over the next month or two, we could see crude prices before the end of this year really start to break out in a major way. So that's all I have for you guys. Hopefully this is something you guys can use. Enjoy the rest of your Sunday and enjoy your trading week. Again, pay close attention to the VIX and pay close attention to SPX 200R, because it will show you what the overall sentiment of the market is. All right, folks, catch you guys on the next video.